So we got right here Larry Raymer, who's going to give us, I guess, his opinion about SoFi. SoFi stock analysis. The negatives of SoFi far outweigh its positive. So I guess you already know what side of the track this dude is on. This man is trying to say that SoFi is a sell, or at least he thinks that the market should be going lower in SoFi. Now we're going to see what he has to say, and then we're going to transfer over to the price chart for SoFi to see if the market thinks the same thing. Because if so, then he has some legitimacy. But if it doesn't, then we have to question the things that he thinks, because the market can never be wrong. The market always tells us what people value at what price. Okay, so this article was produced about 3 days ago, and you guys can see quick bullet points. SoFi grew rapidly in Q4, showing that it is able to recruit many new customers and effectively monetize its user base. That's a positive. That's not a negative. The quality of the firm's loan portfolio remains somewhat worrisome. That's the negative. The valuation of SoFi stock is quite elevated. That's the next negative. Now, for real, think about it. Valuation of the stock is open to interpretation, meaning that you can compute however you want to the value of SoFi stock, and then the next man next to you could do the same thing. They could compute the valuation of the stock a totally different way and come up with a different price. So that is open to interpretation, that last bullet, because no one can actually come to you and say this is how you're able to evaluate or value a particular company. There's so many different ways that people come up with a price target for these stocks that is crazy, and neither one of them can be right or wrong. Like, there's no concrete way to say this is what SoFi stock is, this is what the price ought to be. But then you always come and look at the chart, it's never at that price. And then when you get people to compute the value of these companies' share price, they always say that the market is so far higher than where the price should be. Like the price target is always higher than where the market currently is. So they want you to hold the stock because they think that the value is somewhere astronomical higher. Now let's go ahead and see what Larry has to say. Okay. Now, although this is what he says. Although I'm much less concerned than I was previously about the quality of the firm's loans portfolio. So I guess before, Larry was real worried about the portfolio of SoFi, but now he's a little bit less worried. I believe that SoFi could still be hurt by high default rates within the next year or two. There we go, 24 months. See, he's already thinking long term. 24 months. You know how much time that is? Do you know the things that can occur within 24 months? Maybe SoFi can pay off a lot of their loans to where that high default rates won't be a question. And then the price in SoFi will continue to shoot higher in price. He's given it a year or two. And then he goes on to say, also, importantly, the Biden administration continuing forgiveness of a large amount of student loan is likely to undermine SoFi's financial results over the longer term. Given these points, I continue to advise investors to sell SoFi stock. So those two negatives, defaults of their loans increasing and Biden forgiving student loan debts. Now, he goes on to talk about the impressive quarter that they revealed on their earnings. Profits, though, remains low. SoFi grew tremendously last quarter on both the top and bottom lines. Specifically, its revenue soared 35% versus the same period a year earlier to $615 million, while its net income came in at around $47.9 million. Okay. Also, noteworthy is that SoFi added a net total of almost 585,000 new members in one quarter. So they're out there promoting their business. That's good. That brings in more customers. More customers come in the door. That means more money is coming into your business. And by them adding 585,000 new members, it added in total deposits $2.9 billion. And then the value of the loans held on his balance sheets rose to $1.6 billion. So they're growing. SoFi stock is growing. But to Larry, he's advising people to sell the stock. The rapid increase in SoFi's deposit base will enable it to loan out much more money, greatly boosting its sales and profits. Again, where's the problem? It seems to me like he's looking for the problem to occur 24 months out, because it's currently not being seen today or even past history in the fourth quarter of last year. Even though the firm's growth was undoubtedly in part attributable to the resumption of student loan payments last quarter, its large gains in the areas of deposits, loan value, membership show that it is successfully recruiting and monetizing many new customers. That certainly bodes well for its future growth. Again, Larry, what are you talking about? Where is this negative perception that you have on SoFi? But on the other hand, is that the money, the revenue that came in, $48 million, is too low to him. In the past, when SoFi sold off very little of its loans, I, along with others, had worried a great deal about the quality of its loans. I noted that many young people with student loans, a group that largely makes up a large percentage of SoFi's customer base, tend to have large amounts of debt. For two reasons, I'm less concerned about this issue now than I previously was. First, the company noted that it has sold a significant $1.2 billion of its loans in the fourth quarter. Secondly, it reported that the weighted average FICO score of its personal loan recipients was 744. That's their credit ratings of most of the people who have a loan with SoFi, while their weighted average income was $171,000 per year. So it seems to me like the loans that SoFi is doling out to their customer base, given the income of these people and their credit score, it seems to me like they could pay it back. Now, unless there's some massive recession, some outside depression that goes on within the economy, then yeah, those individuals who have a loan with SoFi, some of those will get fired. Some of those will see their income get reduced. Their credit rating may go down because of the hardship that they have to endure. Yes, that can happen. But on average, these individuals are making a great amount of money, $171,000 a year, and they have a great credit rating, 744 points. Again, Larry, what are you talking about right now? Similarly, the weighted average income for their student loan recipients was $154,000. That is their weighted average income for the student loans. The customers that have student loans with SoFi, they make $154,000. That's on average. And their FICO score is 781 points. Again, Larry, make it make sense. Just make it make sense. So to me, I don't think what he views as a negative outweighs the positives right now in SoFi. Now, like I said, 24 months out is the time frame that he's given, I guess, these default rates to increase that SoFi currently has on his books. But again, that can completely change. But if we do go through a recession and the economy does tank, then yeah, those loans will default. A couple of people will default on their loans. That goes with part of the business. This is a risk-based business. So what do you guys think about the stock price though? Here's our price prediction. We did it in or around the beginning of January, looking for the market to go down. It only came down to this first buy zone and has been slowly elevating. So Larry thinks that the market should be going down. He thinks it's a sell, but the market currently in SoFi, as I zoom out, is slightly trending higher. What is Larry talking about? What is he trying to say? When we can all visually tell that given the recent information from the earnings reports, the increased customer base, the increased loans that SoFi is making, I think the market is still valuing SoFi, if anything, a hold. Because I can see the market in SoFi consolidate and trade within range. I can definitely see that, but I don't see it as a sell right now. The market is not revealing that to me, that SoFi is a sell. Okay, so what we're going to do is we're going to get rid of this price prediction right here. If we were to get out the market now, we'll be down 6.35. But I think the market is attempting to continue to go up in price. I want to create this sell zone though. That here that I'm just putting on the chart is a problem. That is why the market currently in SoFi is getting rejected. Okay, so yeah, we may see the market dip initially, but I wanted to show you the monthly chart. Okay, this is what leads me to think that the market in SoFi, if anything, is going to consolidate. It's because here we did a fantastic month in December. January wasn't so fantastic, but it didn't crash. And now we're seeing in February, the market is recovering from that weakness and sell off from January. That tells me that the market, if anything, is just going to consolidate and not necessarily continue to move down. Okay. So yeah, outside of us seeing this sell zone right here in SoFi, I do suspect that the market's going to try to go up in price. Look at that on the 3-day chart. That definitely looks bullish there. But that doesn't mean anything if there's increased selling right there in that sell zone. Yeah, that definitely looked like there's selling going on there. Okay, so we are going to hold the market right now. I'm just going to hold out. I really want to see the reaction right now in SoFi to see if these buyers are going to really consume and absorb the selling. Because if so, then yeah, the trend is still going up. Okay. So let me just do that. I'll just let you know that if you don't see the market in SoFi break above the sell zone, you already know the reason why. So this would have to be a target, first target. It's already been touched on the low. So we have to do our first target at the high of the sell zone, 950. Gives us 6.5% there. And then our second target's gonna be up here at this second sell zone, $10.30. So we'll just do that. Now we're leery on how the market buyers will convince me that they're willing to break that first sell zone. I'm not that convinced yet, but we'll see. All right, give me your thoughts. Make sure you maintain the profitability, and as always, trade different.